Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders.
Hi, this is Liqian, and Happy New Year for 2025. It's again, a new year, a new president, the U.S. president, and clearly China will be a focus in the next 4 years for sure. So in China, today I'll quickly touch on two things. One is what's the situation in China locally, what kind of physical stimulus is government is rolling out. Secondly, how to look at the tariff and the technology sanctions on China. On the first thing, I think one of the probably bigger news is that Bloomberg reported that Chinese civil servants has got a raise, even though on Chinese website or any media space, there is no such a news. But after checking and also talking to people locally, indeed, broadly, the Chinese civil servants had gotten a raise. But I think some of the commentary was saying that this could be added kick to the consumption, and I will say that's probably a very low impact. The background for this is that many Chinese civil servants had their wage cut. Depends on how much. 20% is probably a good average to use, mainly because the civil servants' total wage is a little bit non-transparent. A big portion of their money comes from the local government, and the local government is not doing so well. So some of those kind of local government bonuses are not coming through. So total salary, they have, on average, probably making 20% less. So this extra kick, which in terms of, how much is probably close to 5%, is, the background is that they've had a wage cut, and this 5% is probably, I think it's the government's way to kind of show that there's a lot of disgruntled government employees, because right now they are under a lot of pressure to do a lot of things as a local government. First, the economy is not doing well, and they need to, they are usually the ones who are at the forefront when people are not happy. So I think for people in the US, it's hard to imagine, but in China, if you buy a house and the house is not delivered, your first place to go to try to get influence is to the government, not to the court or to the developer. To the developer, to the sense. So the local government face a lot of pressure when there are a lot of unhappy incidences in China, which is happening. And then secondly, fertility. Clearly, the government want to increase the fertility rate, even though fertility itself is not a big factor in economic growth for China, but clearly the low fertility is something which the government felt that they are under a little bit of pressure to help young people get married and have kids. Again, for people outside China, this is something which a little bit hard to understand. Usually, like in the US, people make their own personal decisions, but in China, a lot of your decisions are the party and the government is all encompassing. It takes care of you in some ways, but it also asks a lot. So for local government, one of the mandates is that all the party secretaries, they are responsible for their area's fertility rate. So the statistics is pretty clear. And then clearly how you get promoted, your loyalty is very important, but other things are also important too. Particularly the kind of goals that the central government set, and how well the local government delivers those goals. The first obviously is loyalty. whose people, whether you get people to back you. The second is, how well you do. So I think to look at this local civil servants wage increase, the best way to think about it is more, government's way to kind of raise up the morale for disgruntled government employees, and also use this because there will be a local corruption campaign coming, and then local government, many of them will be during this campaign will be kind of set as example, for corruption, and corruption is very widespread. So sometimes the person who it's probably, out of 100, one or two got to be set as an example for corruption charges, and then the 99 probably are also corrupt. But government is kind of it's the different degree of corruption, right? How you define corruption. So I think that is probably the best to think about this civil servants. So that's, the background for the broad fiscal stimulus for China. Again, China is very political. So January 29th is Chinese New Year. And generally before Chinese New Year, or, the first 1 or 2 weeks of Chinese New Year, the government felt generally obligated to spread good news. So actually on policy fronts, or generally we should expect positive news coming out. I know that's kind of funny in a way, because in the US system, whether it's the federal government or the local government, they don't have this kind of a sense that, they have to make the new year special for the people. But in China, it's actually, the sentiments are quite strong. And actually you can see that a lot of sacking of people happened during this period, just for the government to show that, look, we are working hard for you. If you remember last year, the securities regulator, CSRC head was sacked. I think it's on Chinese New Year's Eve, and then a new person was appointed. So it's during this month, usually usually, goes on for a month, and besides, for that week, close to 10 days, China is pretty much shut down. So it's everybody, and then the government feel they need to do something. Like, for example, right now, there are TV shows showing some corrupted officials go in front of TV, recount their sins, and so a lot of those happening. So positive headlines, likely some more money coming for the people who are really struggling financially. So I'm not surprised if the very, very stretched people, like the people who are falling into poverty again because of economic slowdown, is going to get extra kick, probably extra months support. So the central government kind of says each local government can decide how much, which is in some way, if you think about it, so the central government is asking the local government to give money to the people. So it's not coming out with its own money, even though it did give some money through the special purpose bond to the local government. But this is quite telling in terms of how unwilling that the central government to use its balance sheet to stimulus. The main reason is because the central government knows that as soon as it goes on, says it's willing to use its balance sheet, every local government will be on the door trying to get a piece of it. And it's very hard to really please the local government spending. So the central government knows this. That's why every time you see how the central government makes decisions, you can clearly see that it's very, very reluctant to put itself on hook. So for example, this policy of giving money to the very low income family, it's all about local government. You do what you can. That's the main policy. So I think overall the fiscal stimulus generally this year, and particularly the next 2 months, should be positive. On the other hand, I think the baseline that it will do enough to not having higher, so the unemployment rate for the youth has been really high, and I think the government will do enough so that it doesn't continue to go higher. But it won't likely to do significant to lower that youth unemployment rate. It's going to depend on really two things. And these two things is really the uncertainty for China. One thing is, can China continue to innovate technologically in light of the US sanctions? That is, I think, is a more important question than the tariff. Because actually, even though the tariff will impact it for China, but Chinese products is quite competitive, whether quality or price. I think the old idea that Chinese products are good just because they're cheap, I think that impression, people need to update that. Because a lot of things you are seeing high quality. So for example, I love fashion, but if you observe, you go into a fashion buying clothes, usually the pieces that says made in China is probably the high quality piece in the store. And you can look at many other consumer products, earphones or home appliances. So made in China is not necessarily the cheaper, lower quality thing anymore, because a lot of cheaper and lower quality things is actually moved away from China into places like India or Vietnam or other Southeast countries. The more complex, higher quality stuff is actually now more likely to be produced in China. So I think again, that's an uncertainty, and that's a plus if China can really either sustain the gap or close the gap between US. The second thing is the bond rate in China is so low now. So it's closer to 2% for the 30-year bond. That's really low. If you think about, you paying really 2% just to invest, and whether the Chinese investors are now going to be more willing to put money into investment now that the interest rate is low. Now that, I think ultimately, yes, but right now, in the next 3 months, is that happening? I'm not yet fully convinced. Like I see some green shoots, like for example in biotech and in a lot of electric vehicle, in home appliances, in those areas you do see China is making quite progress in those areas, but those are not enough to offset the lower, the number of people employed, and also the lower skilled people who are now struggling with work and the compensation. So I think clearly, China will find, will get out of this current situation. I think some of it is similar to Japan, but it's not Japan, because when Japan gets into the 90s, it's already a very high income country, and also China is probably much more willing to let the companies fail than Japan. So in that spirit, China in some ways is very similar to the US. So I think ultimately, if you can withstand the high volatility, I think investing in China, if you bet on China's technology can continue to advance, then China's equity will pay off. And the animal spirit is more likely to come back in China than in Japan. But the timing is really hard. So again, we've talked about this in China equity, because the majority of time is actually in bear market. So you really need to be willing to be willing to take up the risk to get the payoff, because when China equity rises, it's very sudden, and rises a lot because it's very policy headline driven. Now, do we know when that's coming? I don't think anybody knows. And I'll give you an example of why the timing is extremely difficult. Like this, giving money to the local government employees, civil servants situation. Almost every commentary, made extensive analysis of the December central government economic Politburo meeting, which is chaired by President Xi. But nobody, I think it's pretty fair to say nobody anticipated the wage payout for the civil servants. So that's and if you look back, all these almost several very earth-shattering policies all came out very quick, so suggesting it's probably made quickly by the very top leadership, with probably very few people in the room know this, because in China, if the policies were made a little bit over longer time, they got leaked a lot. So if it's, the Ministry of Finance is involved in extensive planning, then, at least 2 or 3 weeks before the actual announcement, you already kind of know something might be coming. So that's our general background, and I'm very happy to come back to the podcast. And we also try to put out the materials on our blogs and also on Twitter. I'm on Twitter. Try to tweet as much as possible, even though we do have a lot of other research projects on FX, on currency. Currency is another thing on China. Is actually Chinese currency lost some value, but it's overall almost every currency has lost value against the US dollar. So I don't think there's actually, a China-specific area. So we actually have dynamic currency hedges in our strategies, in several of our strategies, both for emerging market and developed market. And I encourage you to check out the materials that I posted. And thank you, and hope to talk again.